Today on The Real Deal, we look at all the excitement surrounding that big fat number, $5.5 billion inflow of institutional investments into Indian real estate, which is a decade high. What assets has this money chased? Which were the big deals of 2018? And what's the outlook on PE and institutional fund flows into India's real estate? That's what we put the spotlight on. Now, let's start with recapping the year gone by. This is data collated exclusively for CNBC TV 18 by JLL. Now, in the last 4 years, if you look at all these numbers, they add up to over $20 billion. And if you compare them to the preceding 6 years, investments have actually been double of what came in between 2008 and 2014. And the line is a steadily rising number, reaching that decade-high number of $5.5 billion in 2018. Who are institutional investors? They're family offices, foreign corporate groups, there's foreign banks, real estate desks, there's also pension funds, private equity funds, and of course you also have sovereign wealth funds, which have taken long positions in real estate. Where did the institutional money go? Now, let's start with 2014 and look at the split. It was almost even between residential real estate and commercial. The next 2 years, though, you see 2015 and 2016, the big bucks went into residential and commercial tapered down, much lesser. If you look, though, after that, which is 2017 onwards, there's a complete reversal of roles. You've got commercial assets getting all the big institutional money, and by 2018, residential has fallen to a very small number of just 500 million odd versus 2.9 billion in commercial. So 2016 was pretty much a watershed year for India's residential real estate, where investor appetite started disappearing. Now, within commercial, it's important to see who really bagged the big monies. And if we start with 2017, because that's the year where commercial really started gaining traction, the biggest deal was, of course, GIC Singapore, DLF Cyber City Developers, which, if you look at in crores, was a number 8,900 crore rupees. Big deal. Xander's investment into Hiranandani's office assets added up to about $1,000 million or 6,700 crore rupees. After these two mega deals, though, the numbers look a little bit more modest, but they're not. Xander's investment in Shriram Group at $190 million. Taurus put money in Embassy Group. And of course, IFC also invested about $50 million in Mahindra Life Spaces. Now, let's look at 2018. Blackstone's buy into India Bulls 2 commercial spaces added up to the biggest deal of the year at $730 million, which is about 4,750 crore rupees. The deals were more evenly spread after that. Brookfield bought into SR Group's assets, which is the Equinox office. Blackstone bought into L&T Realty's Navi Mumbai Seawood retail space. Xander invested with Phoenix Group to develop office space in Hyderabad. And Mapletree actually bought out existing investors Shapoorji Pallonji and CPPIB Chennai SP Infocity and got a very good return of 30% plus. But it's interesting to also see whatever little flowed into residential real estate, where did it actually flow? Well, let's start with 2017 here. The big deals were Brookfield took a position with Total Environment Building Systems. That's a Bangalore-based company. HDFC Ventures actually took 2 bets with Radius Developers. That was twice in that year. They invested in 2 tranches. GAIC and KKR put their money behind Chennai-based VGN Developers. And Shriram Properties also managed to get money out of JM Financial. In 2018 now, if I come to that, GIC moved from, of course, they've taken already all the pie that was there in DLF's office assets. So they've now started putting money in DLF's residential projects. 2 Moti Nagar projects got about $180 million. You also had a Peninsula Brookfield buying out Inco's Hyderabad residential project, and you also had Motilal. So here comes the real estate domestic Ps. Motilal Oswal P put in money in Casagrande's Chennai project. ASK took 2 big bets, one with Kumar Properties and the next one with Naik Naware Developers. So if I look at, where all the money is gone in, you don't really get a sense of collated which are the big cities which have got the institutional investment, but look at how it's got divided between India's top 10 cities, or 7 cities rather. 42% Mumbai bagged in 2017, 57% in 2018. So Mumbai share actually went up in 2018. NCR dropped dismally from 2017, 30% to down to just 8% in 2018. Bangalore remained more or less steady. Hyderabad moved up big time. Look at this, 1% to 20% in 2018. That's where, big office space money is going. Pune, of course, dropped a little bit, 5% to 2%, and Chennai also dropped from 7% to 5%. So, what is expected out of 2019? Remember, it's an election year. You also have some amounts of global uncertainty. Joining me to assess the investment mood of 2019 are Ramesh Nair, CEO and country head of JLL India. We also have with us Sunil Rohakale, MD and CEO of ASK Group, and Vikas Chimakurti. He's the CEO of Kotak Realty Fund. Gentlemen, thank you very much for joining me. Sunil, my first question is to you. 2019, an election year, also a global, year of global uncertainty, the slowdown of US economy, which is now becoming visible. What's your outlook? I mean, are we going to beat that number of $5.5 billion of 2018 or not likely?
So my sense is that residential real estate is bottoming out after having the last 3 to 4 years of slow sales velocities and pricing pressure. It is started getting revived. So first time home buyer market, less than 1 crore residential early stage. And in the past, what we have seen a very interesting phenomena. The private equity got an exit because of the NBFCs, HFCs or some banks giving the lower cost of capital. So the developer has converted the high cost private equity money into a lower cost of fixed debt money. Now the NBFCs would be taken out by the private equity. So I think the ecosystem is going to be a little reverse, and the NBFCs would be taken out because the developer today need patient capital. He need money for 3 and 5 years to complete the project. Okay. And he doesn't want to service any single penny from the servicing of the debt because he would like to complete the project on time because he's running against the RERA timelines as well. So I think the opportunity is to look at those projects which probably have got margin of safety, which has got visible cash flows, and converting that debt into an equity for a longer period of time. That is A part. B part of the business is where you would find some amount of consolidation opportunities emerging, where the private equity residential real estate money would help in buying out these assets and turning around these assets to the market reality. Okay. So I clearly see the opportunity there for residential early stage patient capital 3-5 year investment into the first time home buyer market.
Okay. What you've said is very, very interesting, that maybe 2019 could be the year of actually now NBFCs flipping assets to Ps. Vikas Chimakurti, would you agree with that? I mean, or do you think now at least domestic funds are with the affordability ratio beginning to look very, very mouth-watering, especially for home buyers? Do you think that now some interest even of large foreign institutional investors is likely to come back to real estate residential?
Residential by definition is the largest asset class in India in real estate. There is always opportunity to deploy capital in residential. With respect to your question whether NBFCs will be given an exit by private equity funds, on paper, theoretically, yes, private equity funds are more patient capital. They have the ability to withstand the cycle and ride the cycle along with the developer, and they should be the natural route for giving the exit for NBFCs. But ultimately, it boils down to how much money have the NBFCs given into the project already. So I don't think the extent of exits which NBFCs are looking for from private equity funds will fructify, because the amount of money which has been given by the NBFCs in most of the projects is more than what a private equity investor can stomach.
Okay, all right, very interesting. So you're saying that even if they would want to buy, they probably don't have the stomach to absorb any more. Ramesh, clearly the trend shifted somewhere around 2016. Even, I mean, the PE funds right up to 2016, if you look at the numbers, continue to back residential real estate far more than commercial real estate. But it's the Brookfields and the Blackstones and the GICs which tipped the numbers in 2017 and 18. Those mega deals just took the numbers in favor of commercial real estate. My question is, what happens in 2019? How will the money flows be? Look at a Blackstone. It scooped up so many residential assets in the subprime crisis, but we didn't have any kind of a shocking event like that. It was just a desperate lull, as we call it. They're big investors. Are they looking at residential at all, or are they likely to back office assets, commercial assets in 2019?
Thanks, Manisha. We expect to see 4-5 big trends. First is, I think there will be more capital chasing development assets. Till now, most of the capital was chasing core income-producing assets. That number is bound to increase as there is pressure on deployment to these funds. We celebrate looking at a $5.5 billion. Globally, that pool is $900 billion a year. So there's huge amount of opportunities still left. So one is development. Second is definitely a lot more exits will be seen. We recently saw CPPIB exit an asset in Chennai, which was valued at around 2,500 crores. The IRR out there was around 32% at a multiple of 2.6. We are soon going to be seeing the Blackstone exiting partly through a REIT. Now, these kind of stories, when a Blackstone exits, there would be hundreds of limited partners across the world who have invested with them, who hear the India story. And that's quite confident that that REIT will be reasonably successful. So we're going to be seeing a lot more exits. The third is we're going to be seeing a lot more creation of platforms. In the last few years, we've already seen close to $7 billion of platforms being created, most of it in office and industrial. We're also seeing the number of buyers for today. If we put 1,000 crore office or 1,000 crore mall for sale, there are close to 8 to 10 buyers for that. 4-5 years back, there were probably just 2-3 buyers for that kind of an asset. And lastly, the big trend I would see for 2019 is newer sources of capital coming in. 4 years, 5 years back, if I had mentioned on the show that Canadians would be the biggest investors in India, people would have laughed. But today, look at Brookfield or CPPIB, the wave of Canadian capital which is coming to India. I think there would be newer sources of capital. There would be Japanese, there would be Koreans, there would be newer sources coming in, newer pools of capital from Middle East, from Singapore, from US. So these are some of the big trends I expect to see in 2019.
Are they going to worry about the election 2019 outcome at all? I mean, the way we're looking at it, there are some experts and pundits who are calling out a hung parliament this year, if nothing else. Is anyone going to, I mean, these big chunks of investors, a new pool of investors, would they not be looking for continuity of policy, Ramesh?
We've been asking this question to many funds. I believe both sides are very investor friendly. You may remember, things went down to $1 billion in 2012, 2013, but we saw the peak of 7-8 billion happening in 2007-8 when the previous Congress government was in power. So both sides are industry friendly.
All right.
What is typically expected to happen is around March to May, we may see a little bit of slowdown in decision making. But whoever comes to power, I think by May things would again pick up. And we are quite confident till March, still a lot of things will happen, at least in the PE space.
All right. Would you go out there, Sunil, and raise more funds? Do you think that this is a good climate to even get, raise another fund, have international appetite for the fund as well?
So we clearly feel that India, the way international investors look at this point of time is with a lot of respect in terms of the macroeconomic indicators of the country, and which probably is the currency, which may have had a volatility, but it again is showing the sign of stability, because it was stable for almost 3 to 4 years and it's have seen some volatility lately. But so stability of the currency is very, very vital. The stability of the policy regime and more governance and disclosures, which through the whole of the RERA regulation and the GST application, stabilizing these regimes is more important so that one can able to predict consistently and mitigate the risk associated is very important. So we clearly feel that we have seen a lot of excitement and interest is being seen by the global investors as far as India is concerned. At the same time, domestically, the interest is not yet died down. The large family offices, ultra HNIs, are clearly looking at this as an opportunity to diversify the capital, which probably was largely into public securities for the last 3-4 years. And I clearly feel that that part of the capital is also wanting to allocate some monies to the private equity, which is 3, 5, 7 years of money, which can have a potential money multiples and IRR which are superior to generate the portfolio returns better. So clearly, I feel the opportunity of raising capital, no doubt, exists, which means 5 or 7 year capital. But at the same time, whatever dry powder all of us or the private equities investors have got, I think maybe it was little slow in terms of 17 or whole of 18 calendar year. But I think 18, the whole of 19, I look like there would be a good amount of utilization of these products, which are healthy, which has potential cash flows. Today have a mismatch of cash flow. There is a margin of safety. And if the previous lenders really do not haggle and may have to take the haircut at times, they just move on. My sense is that revival of the projects or some additional capital injection in the private equity space probably would dominate this calendar year, and I see a great amount of opportunity for deployment in the FY19.
Always. Whenever there's a crisis, PE funds, of course, will find more opportunities. Vikas, what's your take in terms of the appetite both of domestic PE funds and, international funds, of course, are chasing grade A office assets, and like Ramesh said, for every asset now you have 8 or 9 investors queuing up. So give me a quick outlook.
So I think the opportunities will be huge, which will come out for private equity investors, basically who can withstand the cycle. To give you example, post ILFS crisis, in a week's time, we deployed in 2 transactions. So the opportunities will come as long as but I believe that most of the opportunity would be from existing capital providers taking a haircut and taking the capital off the table. Very few opportunities which we are seeing in terms of growth capital, but that also, I think, once the developers, some of the stronger developers start looking at acquiring assets at a discounted rate, I think that we see it in second half of opportunity, which we see in 2019.
All right, gentlemen, there's lots more to talk about, but we'll have to leave it there. So seems that definitely there are expectations of more distressed deals, at least on the residential sides, consolidation, which will give PE investors and institutional investors some opportunities and some amount of excitement to retain for institutional investors in commercial and office space. Thank you very much for joining me on this beginning of 2019 discussion. When we return, we'll bring you the views of Martin Samworth, Group President and CEO of CBRE in Europe, Middle East and Africa. How does he place India in the context of a growing global uncertainty? And of course, some warnings also given out by European Central Bank. 2018 saw a decade-high institutional investment inflow into India's real estate. Majority, of course, went into India's commercial or office space. How are global investors viewing India in 2019? It is, after all, an election year, like we said before. Add to that global trade wars and uncertainty that's brewing. To share his insights with us, we are now joined by Martin Samworth, Group President and CEO of CBRE. And we also have Anshuman Magazine, who's got elevated to take care of a much larger portfolio, now 25 countries under CBRE. So let's start with Martin first. Martin, thank you so much for joining us on the channel. How's 2019 looking for you in the context of all the things that I spelled out? Big election, global uncertainty, and some warnings from European bankers.
Well, I'm positive about it still. It's typical that around an election you will see some slowing of activity for a short period of time, predominantly just before an election process. But that's typical in countries around the world. That's not particular to India. But the fundamentals here, I still think, are very strong. You know, you've got one of the fastest, if not the fastest growing economy in the world, and a maturing real estate environment with strong demand from occupiers and investors. So I still think the prospects are very good for the year ahead.
You know, we've had a pretty good run in 2018 with office leasing activity. Do you believe interest from occupiers as well as institutional investors will continue?
Yes, I do. I still think that there's a lot of companies looking to expand their operations here, and new companies looking to get exposure to real estate market and to the economy and the educated populace that you have here. You've got 1.3 billion people here. You've got a huge economy and huge opportunity. So I still think that that rate of take-up that we've seen last year and in the last few years, on average I think about 40 million square feet, it's one of the largest take-ups in the world, is probably set to continue, I would think.
Okay. All eyes, of course, are on India's first REIT. What's your take? Will there be enough global appetite for Blackstone Embassy REIT?
Yeah, well, I think REITs are something that happens as a market continues to mature. The quality of the assets and the investor base behind it is obviously important. But in the case you've referenced, I think that has strong potential and should, as a consequence of the standing of the likes of Blackstone, certainly encourage other investors to come in and participate in an investment vehicle of that nature. So I would be positive for the expectations and success of that going forward.
Anshuman, first of all, a big congratulations. 25 countries now of CBRE, and I believe your portfolio includes India, Southeast Asia, Middle East and Africa. But let me ask you that question where Martin left off. What's your own take on the Embassy Blackstone REIT? Will it sail through this year, and will it get some amount of interest from global investors?
Well, there are no. Thank you for congratulating me. I just want to mention that there are no guarantees, but this time I'm quite optimistic that the REIT will happen this year, because the papers have been filed, and hopefully the way the market has been in the last few years and how it's looking in 2019, so I'm quite optimistic the REIT will happen.
Any change in terms of where investor appetite will be in 2019? Will it still chase office assets?
Certainly, because there are 2-3 reasons for that. One, the market itself is low risk. The occupiers in the office space are international companies, the blue chip companies, and the return is good. So that will continue to attract people. Plus, I feel it's always a herd mentality when you see names like Blackstone, Brookfield, GIC and others putting in money. It encourages other international institutional investors to come into the market. Yes, we will get into a situation where the opportunities will reduce for institutional investors to buy large investments or portfolio investments for office because a lot of it has been taken up. But the interest will continue as the new supply comes in. India is a well-established market for institutional investors to invest in office space now. And this will continue. Of course, the challenge will be what would be the cap rates going forward, and many other things like currency, how that moves, and how much supply or opportunities are there for investment. Interesting part is, since last 4 years, the amount of office space which has been taken up in India adds up to more than 160 million square feet. And this is literally unparalleled, would be one of the highest in anywhere else, compared to anywhere else in the world. We are still adding up the numbers for last year, but we expect anywhere from 40 to 45 million square feet office space to be taken up in 2018. So yes, so there is a concern that how long will this demand sustain or keep on growing. My personal feel is 2019, the momentum will continue. There is, because I'm talking from the pipeline, 2021 onwards, we'll get to know towards a later part of the year, but I think 2019 is expected to be a good year for office take-up. As far as the supply is concerned, again, we are seeing 30 to 35 million square feet of supply coming in almost every year. There is oversupply in some parts of each major city, which are may not be the prime areas. On the flip side, in the prime areas, there is shortage of space. So overall, we will, of course, one day get into an oversupply situation, but that's not going to happen in the near future.
The most people are now saying that the worst is behind residential sector. Do you think that we will see big numbers coming in terms of investments or affordable housing at least?
Yes, I think it will be slow, but there will be institutional investment appetite for residential. I think one of the most important reasons would be REIT, because, RERA, I'm talking Real Estate Regulator Bill, and because of RERA, a lot of institutions will have more confidence to invest in the residential real estate. Number two, like you mentioned, the valuations are better. And number three, we will see the residential market slowly turning around, especially in the affordable sector. The good part is there is supply coming in the affordable sector side of the residential real estate. The demand is also absorption is happening there. So I certainly expect the institutional investment now looking at residential. It's not going to happen overnight, but it will start coming in because of the reasons I mentioned to you.
Martin Samworth and Anshuman Magazine, gentlemen, thank you very much for joining me. Well, let's hope the optimism for India's commercial real estate continues in 2019 and that first REIT listing comes through. Much more institutional money needs to find its way also into affordable housing. On that note, we're going to sign off. We'll be back next week with Real Deal.